Perfect. So yeah, good evening, everyone. I know officially what is this, day 4? Interesting. Time flies. Yeah, thanks a lot for joining. I know it's a Saturday evening. So as mentioned, what we will try to do is, we will try to get started with options. Introduction to options, right? Now we studied futures. What I will do is
Yesterday, 60 questions are completed or not? Just in between that, just I logged out actually.
no.
Sorry, because just in the meeting also I came out and I attended the class actually. So to yesterday, just I would like to know whether how many questions are attempted. If it is, don't mind, just so that I can able to review today's class, yesterday's class once again.
Okay, we haven't attempted, just to give the flavor, what I will do is, I will actually share the PDF, over the Notion doc, you try to attempt that, primarily, right? Yeah, okay. So, yeah, going back, right, this one small request is, when I start, please don't interrupt, okay? I mean, like, due request, right? When I give a pause, please ask anything because I'm actually losing the flow. I come with the flow and like, when I lose the flow, it becomes very difficult, okay? Just a small request. But when I take a break, you can ask questions. Okay, let me get started. I think we will start with the, the options to start with. Please kindly mute yourself. What we will do is, so we've discussed futures, right? Futures and forwards, and I'm sure you are all very confident about the topic. Okay. Just to revise on the futures and forwards, what did we say about the futures? Going back to our Goldsmith example on day 1. If I'm actually doing a forward contract with my goldsmith guy or the gold shop owner, I need to honor that contract, okay, which is my forward contract there. Okay, similar to that is like the standardization. The future has come into the picture, but it's a very standard contract. Okay. Now, what happens in the futures is, what we have discussed, there is an unlimited potential to go up. There is an unlimited profit for me, or there is an unlimited loss also. Okay, there are two aspects here. There is an unlimited loss and there is an unlimited profit. Now, what is the main key characteristic of a future contract? That it's a standardized contract and I need to honor that contract. You're getting my point, right? Please understand. That's a very standardized contract and I need to honor that contract. Okay. But there might be some instances where I wanted to play a certain, commodity or play a certain instrument where I don't want to, I like that particular thing, but I don't want to honor the contract, but I want to enter into that. Okay. Don't get confused. So let me quickly share my screen. We will do one quick example. Okay. So primarily, the way how we will study is this options. Now, for example, like, this is a very common scenario that can happen, even in the Indian market. Okay. So just understand this concept, first of all, and we will go through the multiple parties that are out there. Okay. Now imagine now I'm a buyer. Okay. I wanted to purchase a particular home. So for example, the cost of the home is 1 crore for me. Got it? And respectively, there is a seller here who is actually selling the home for me. There are two parties here. There is a buyer and there is a seller. Now, what happens is, I am still in influx, whether to purchase that home or not. Okay, I am interested in the particular home, but I am still trying to figure out, whether I can arrange the money, whether I wanted to really purchase it, or might be there is some family decisions that are still pending at my end, etc., and all that stuff. Okay, or I might feel that's one point, and I am also waiting, for the say if there is a change in the prices in the market. I wanted to understand how the price of this particular home will go as well. Okay, in the sense like in the coming days, whether that 1 crore will become a 1.2 crore or 1.3 crore or 1.4 crore, or whether it will become 95 lakhs, 90 lakhs, 85 lakhs, etc. and all. Okay. In this case, what actually happens is, I will make a contract with the seller. What I will go and do is, I will actually go and say, hey, you know what? I really like this home. Okay. Wherein what I will do is, I will actually pay 50K, 50,000 or 1 lakh. In a typical example, right? We will convert that into jargon in a bit. I will pay something like a token amount. You're getting it, right? I will pay a token amount to the seller. And what I will say, hey, you know what? Now I am interested in this particular property. Okay. Now, the interesting part with the option as a contract, now what did I say here? First of all, I have sort of, gotten into a particular contract. What is a particular contract? I am interested and I have paid you a certain amount, which is whatever 50,000 or 1 lakh. Okay. Now, there could be two instances that can happen here, right? What are the two instances? So tomorrow, if the price of the home, and the interesting part is 50 lakh or 1 crore, and after 1 month or 3 months, I will actually decide to buy the house, but the price is going to be only 1 crore, by the way. Okay. It's similar to what has happened with the futures. Okay. Listen to this carefully again. Now I'm interested in the home, in a particular home. I wanted to purchase it 1 crore only. But there are certain conditions that I have to meet because my family obligations. I'm still trying to figure out whether I have to purchase that home or not. Okay. What I will do is I will go to the seller and I will say, you know what, I'm interested in the home, but instead of paying 1 crore, I'll actually buy the home at 1 crore only. But instead of purchasing, paying you the 1 crore, I'm going to pay a certain token amount, which is whatever 50,000 or 1 lakh here. Got it? Until here, clear, right? Now, let's understand what is going to happen. There are two things here. These are the two key components. What is going to happen in this particular contract, okay, which is your option contract. We are building the characteristics of the contract here. Okay. Now, what did we say in the futures contract before? In the goldsmith example 3 days ago. Now, I go to the goldsmith and I will say, I'm going to buy 2 grams of the gold. I'm locking in the price. Guys, please mute yourself. Thanks. I'm going to buy 2 grams of gold. And I'm actually locking in the price, and I'm also locking in the time. But what did I say here? I have to honor the contract. At any cost, I have to go and either I have to purchase the gold, because the contract that I have, got into, which is the futures. In option, there are two things that can happen. Here, as a buyer, what happens, in option is, this is a very key important thing. This is a very favorite question of NISM. Without this, again, there is no exam at all, right? 100% there will be this question. As an option buyer, I have the right to buy. Okay. What is that? I have the right to buy, but not obligation. You're understanding it, right? I don't have the obligation to buy. What does it mean by that, right? After 1 month, I can actually go to the seller and say, for example, there could be two instances that can happen here, right? Multiple instances can happen. What is going to happen here? After 1 month, I can say that, you know what, might be I could not get my bank loan, or might be I got some other property, sort of a similar property in a community at a lesser cost. Okay, might be instead of 1 crore, might be I have got it at like 94 lakhs or 93 lakhs. Okay. Then what will happen is I can go back to the seller and then say, you know what, I have paid you the token amount. Okay. Now I am not honoring this contract. Got it? Which is, I have the right to buy, but I'm not obligating the contract. I'm not honoring the contract. What is going to happen in this scenario is I am not going to get back my whatever 50,000 or 1 lakh that I have paid. Understood everyone here? Clear? Okay. Now, let's understand a couple of scenarios what is going to happen here. Okay. That's first thing, where what am I going to say? My obligation is not buying the property here. In the second instance, what is going to happen? I can actually go back to the seller and then say, you know what, I'm going to buy the property now. Okay. And I'm going to buy the property. In that case, the seller at any cost has to sell me the property. Okay, let's first look into a couple of instances here, right? First of all, you are clear until here. Let me take a quick pause. Clear on the scenario here, right? We will start slowly building it, the scenarios and how what scenarios will happen. Okay. Now, what is my first scenario, right? What is my first scenario? Now, there is a buyer and there is a seller. My 1 crore can become actually, the property value can become 1.2 crores, right? But what am I going to say? Sorry, but at the end of the day, how much am I paying? I'm paying only 1 crore only. Okay. So what is the profit that I'm actually making in 1 month? I'm going to make 20 lakhs profit, right? 20 lakhs profit minus the 1 lakh token amount that I have already paid, right? So what is the profit that I'm going to make? I'm going to make 19 lakhs as profit. Got it, guys? Clear here? Now, there is a second scenario. In terms of from the buyer perspective, we will look into from the buyer perspective and we'll go to the seller in a bit. Okay. In the buyer perspective, what can happen is 95 lakhs, is the value of the property here. Okay. For example, after 1 month, what has happened? Instead of 1 crore, the property value has fallen to 95 lakhs. Okay. In this instance, what is going to happen? What will I do? In this instance, generally, what will I do?
I will not buy and I will leave my 1 lakh rupees.
Bingo. Perfect. Right? What is going to happen? I have the right, but I'm not obliged to pay. Right? What am I going to do? Very good, sir. Very good. What is my loss here? My loss will be only 1 lakh. Got it? Now I'm introducing a small thing here. We will convert everything into jargon, bit, and these are all the questions, right? We are looking into this example. These are all the questions. I think there will be bunch of 6 to 8 questions that will come from this topic or even more sometimes. Okay. In this instance, what am I? I am actually an option buyer, right? I'm actually buying a option, right? Because what, this is a contract that I'm getting in. What is an option? As a buyer, I have the right, but I don't have the obligation. Okay, that is a very famous question. I have the right, but I don't have the obligation. Now, what is the profit potential for an option buyer? What is the profit potential for an option buyer?
Unlimited.
Very good. The profit potential for an option buyer is unlimited because that it can be 1.2 crore, 1.3 crore, or 1.4 crore. Okay. This is again second question point, right? The third question, which generally NISM always loves is what is the loss potential for an option buyer?
Limited to 1 lakh.
Very limited, right? The answer always will be the loss for a option buyer will be limited, which is equal to the premium that he or she has paid. Clear, everyone? This is the, from the option buyer perspective, these are the concepts to start. Okay. Everyone clear here, right? Okay. Now let's actually move on to the seller perspective. Okay.
Kiran, I have a query. Sorry to interrupt.
Go ahead.
Kiran, if the property value comes down from 1 crore to 95 lakhs, and if I am the buyer, then I would be in a profit by purchasing it at a lesser amount. So why would I exit? I didn't understand. Sorry.
No. You can't buy it at 95 lakhs. You have to buy it at 1 crore only because this is the price you have logged in into the contract.
Okay, at the time of paying the token amount, I had assured that 1 crore pay karna hai. So that amount stays, and hence I am not getting into the contract is just because it has come down. So I would be in a loss of 5 lakhs overall.
No.
But in this case, because I have paid the token, so a loss of 1 lakh only.
Correct.
Okay.
what I will do is I will go to the seller and say, "अरे भाई, right, मेरे पास पैसा नहीं है और कम हो गए है, but whatever we have agreed is 1 crore. I don't care now. I'm not going to buy this property. Let me lose my 1 lakh and then I will move out of the contract. No obligation there. Got it? I'm not obliged to honor the contract. But in the case of futures, you have to honor the contract. Okay, that's a very key difference. Okay, got it? Everyone clear right here?
Got it. Thank you.
Perfect. Now come to the seller side, right? Now what is a seller? Seller, we generally call it as an option writer. Okay. Now let's look into again the two sort of a couple of scenarios here in from the seller perspective, right? Now 1 crore is the contract value that we have logged in. Now the contract has become 1.2 CR, right? Now the most important part is, the buyer has the right, but he is not obliged to honor the contract. But whereas in the case of the seller, listen to this very carefully, seller has to oblige the contract at any cost, either on a positive side or even on the negative side. Okay, what do I mean by that? So for example, I am a buyer, I will go to the seller, you are the seller, right? If I come to you and then say, what, might be Farhad, Arun sir, Ashish sir, or, I am ready to honor this contract, you cannot say no to me. Got it? You have no right. Guys, please mute yourself. Thank you. Please. I'm dealing with so many stuff and I can't do multiple stuff. Please kindly request. Okay. Yeah, going back, right? You are a seller and you cannot say, Kiran, right? What? I'm not honoring this contract. You cannot say that. Seller should oblige the contract at any cost. Seller doesn't have any right to say no. Got it? So in the whole instance, generally what happens in option buyer has more rights and option seller doesn't have much rights, right? Option seller, if in the case of if I'm coming to you and then if I am saying, you have to sell it, you have to sell it. That's it. Okay, you need to honor the contract. Okay, the one key important part, right? Seller cannot say no. Please always remind that. Remember this because this is very, very, very important. What the exam does is, they will try to do some, English jargon ka jugaad and they will try to ask the questions. Seller cannot say no. Seller doesn't have any right. Seller is obliged to sell at any cost. Okay. Now let's come to the, the profit and loss component. What will happen with the seller for us in this instance, right? Now, what is the property value? 1 crore, right? It has become 1.2 crores. Okay. Now, what is the loss that this guy is going to make?
20 lakhs.
20 lakhs?
Unlimited.
19 lakhs.
Minus
the premium. Unlimited. And the premium.
Sorry, 19 lakhs. 19 lakhs. My mistake.
Very
20
good.
lakhs
Right?
minus the premium.
Very good, right? 20 lakhs is what he is losing minus there is this 1 lakh that I have already received as a seller, right? So what is my loss here? My loss will be here 19 lakhs, right? But in case, if the price is actually falling to say 65 lakhs, 65 lakhs, okay? But the buyer is like, you know what? I don't care. I wanted to buy this because I believe the property will appreciate. ये तो बड़ा अच्छा जगह है. Like I don't care. I'm going to buy this property. He will come to you and he wants to buy this particular property. Then what is the scenario here?
36 lakhs.
Primarily, what is going?
Buyer has to pay 1 crore, sir.
Sorry.
Buyer will pay the agreed price.
Can you repeat, sir? Kiran, sir?
36 lakhs would be the profit.
So
Profit
yeah.
will be only 1 lakh rupees.
Okay. Everyone going all the ways. Okay, I
It will
want
be
you to
only
think.
1 lakh rupees.
Okay, why? Explain.
Because the buyer has the right,
Buyer
but
will
not the
not exercise
obligation.
the contract.
No. So what is going to happen in this case? In the case of the 65 lakhs,
As a buy, as a seller, he has to obligation to sell the property.
correct, right? See, this is a little tricky situation, right? Because what did we
Buyer is having the intention to buy, so he has to pay the original contract amount agreed upon. 1 crore he has to pay.
That's correct, right? Absolutely, right? Okay, let's switch gears. I think we will see on a couple of slides, and then we will actually go through this. But everyone got this concept of what is an option, right? Obligation from the buyer side, seller side. Until here, clear, everyone? Okay. Now, I will introduce you this one concept, which is, let's translate now this into the exam perspective here, right? That 1 lakh or the 50,000 amount that I have paid, is actually called premium. Okay, please make a note of it. That is actually called premium. Okay, so the options generally only run on premiums. Okay, let me quickly switch to my PPT. I'll actually show you this. You guys are super smart, yeah. No, I don't know why why I need to teach you as well. Give me a second, guys. Okay. Primarily, this is what we have mentioned, right? The house value today is, I put it in dollars, don't worry. You can consider that 1 crore there. The premium, whatever that 50,000 or 1 lakh that you're paying is considered premium. Okay. What is the locked in price? The locked in price is actually called the strike price. I will show you that, on the broker just in a bit, don't worry. The strike price is called, which is the locked in price. In our previous example, it is 1 crore. Okay, the time limit expiry 1 month or 3 months or whatever stuff. Okay, so what you are doing, you are paying that non-refundable fee today, which is called premium, and you are actually locking in the price for later. Okay, that's a simple thing all about, right? Now, please also remember this, and we're translating it into the jargon here. So the strike price is what? The predetermined price, which is our 1 crore. Premium is what? The 50,000 that I have paid. Expiration date is what? After 1 month is where I'm actually promising that I will, either decide to honor the contract or not honor the contract. Okay. Now, I think we have discussed this, but let's go through this, because if you put it in the back of your mind, it becomes very easy. Again, discuss this. Gold in the futures, what you need to do is you need to fulfill it. In options, it's right only. You need not actually oblige. So what is the upfront cost here? In the case of options, it's just only the premium, that 50 lakhs or 1 lakh, that I am paying. Okay. In the case of futures, what? Futures, there is no money involved as well, right? In the case of the gold example, we are not paying any money, or neither we are not taking the possession of the quantity. What we are doing there is, in case of the futures, especially from the exchange perspective, we are actually paying a margin, because who actually charges the margin? Exchanges ask the brokers to charge margin to the investors, right? We are just only paying the margin in the case of the futures. Okay. Now, what is the maximum loss to the buyer and holder here? We have discussed this just now. Like, for example, going back, if the price has fallen to 95,000 and 95 lakhs, I am going to lose my 1 lakh, and then I will just move on. Okay. So that is the limited to the premium paid for me. That is I have limited loss, in case of I'm an option buyer. Okay. Now, the last one is the most important point, please take a note of it. Can you, let go of the expiry, right? That means, can you actually not honor the contract and let go of it? Absolutely yes. Okay. But in the case of futures, can you let go? No. You have to settle it, or you have to square it. Clear? Now, what we are trying to do is we are actually trying to compare the futures and options. Okay. Any questions here, guys? Oh my God, so many. Okay, this is the slide for options and futures, sir. Vijay sir. I hope you are clear now.
Can we say that options are much safer bet than futures?
Options are safer bet than futures. Yes. As long as you know how to protect the risk. That is why options as a financial instrument came into picture. You're correct.
Kiran, I will add one more thing also. Options having more options and futures is not having the more features.
Oh yeah. see the lovely, nice. Yeah, cool. Let's move on. I think this is what you need to. I think we discussed this, but like about translating this to the exam jargon here, right? For us, primarily, what did we say? If I'm in the buyer, I'm paying the premium upfront, which is my 50 lakhs or sorry, not 50,000 or 1 lakh. I have the right, but not the obligation to exercise the option. Okay. I can actually decide to buy the house or not decide buy the house. Okay. I will only exercise when it is favorable to me. Got it? Like, favorable could be multiple factors. Mere paas paisa hai, right? If I feel that, the price will appreciate, or by the time I exercise my option, the house value has become 1.1 CR or 1.2 CR. Whatever the favorable conditions could be multiple conditions, only then I will exercise my option. Got it? What is the risk? I think, please note that I'm repeating that multiple times because without this question, there is no exam, right? The risk for an option buyer is equal to only premium paid, nothing else. Okay. Upside can be large or unlimited. Okay. Now let's come to the seller part here, right? What does the seller do? Seller actually receives the premium upfront. What did we say here? Whenever the buyer says, okay, I will actually buy the property, they have to honor the contract. They cannot say, no, I'm not going to sell you. He cannot say that. He or she cannot say that. They have to honor the contract at any cost. They are legally obliged to honor the contract. Okay. Now, mention like whenever the buyer exercises, right? Now, what is the profit that they are going to make? I think this is where we got little confused. That's why I actually opened this, right? Now, for example, what is the profit, that these guys, the seller will generally make? For example, right, even if the property has gone to say 1.3 CR, 1.4 CR, or 1.5 CR, right? Now, how does the execution happen there? Now tell me. If it is 1.2 see the 1 crore property has become 1.4 crore for 1.4 crore, who benefits in that instance primarily?
Buyer, sir.
Buyer.
Buyer.
Option buyer.
Option buyer is going to get benefited. What is the price? What is the profit? The seller is making in that instance.
1 lakh.
That's it.
Premium.
Everyone clear, right? Whether the price has gone to 1.4, 1.5, 1.6, the seller is going to make only 1 lakh, which is the premium that the buyer has paid, nothing else. But in case, if the property value has gone from 1 crore to say 65 lakhs, okay? In that case, now let's analyze. In that case, what is going to happen with the buyer?
He will not honor, sir.
You will not honor? No. What is the loss?
1 lakh.
1
1
lakh.
lakh. Got it, right? 1 lakh is the loss. That's it. Okay. He has unlimited. The loss is limited for the option buyer. But say if the price is going from 1 crore to 65 lakhs, what is the loss for the option seller?
34 no lakhs. Loss, sir. No loss.
Why no loss?
34.
34 lakhs.
Primarily, 35 lakhs minus the premium what he has received.
Premium what he got. So
yeah, 34 lakhs is So 30 you guys are super good. So 35 lakhs minus the 1 lakh premium that he has received, 34 lakhs. So primarily what is happening is, in the case of the seller, the loss is unlimited. Okay. Of course, the contract did not get honored, but in that case, what is happening? The loss is unlimited. Got it, guys? These 4 concepts, at least you will have 2 to 3 or 2 to 4 questions in the exam. Pakka. Okay, take me for granted. Everyone clear on this? or we can repeat this. Everyone clear? I think this is very clear. I took the property example to actually translate into English. Yeah.
Sir, can you repeat one?
Can you repeat one? Okay. Which one, sir? Which point? Everything?
No, sir. Just buyer and seller, the older and writer.
Okay. So 1 crore is the price that we have agreed to buy, sir. Okay. Now, as a buyer, I have paid 50,000, 1 lakh as a premium. Okay. Now we are analyzing the instances of if the 1 crore property value becomes what happens on the both sides, right? Now, from the buyer perspective, if the 1 crore value becomes 1.2 crore, what is my profit? Think through quickly.
20 lakhs.
20 lakhs minus
19 lakh.
the premium that I
19
have
lakh.
paid. Already I have paid 1 lakh. So 19 lakhs is my profit. Clear, sir, on that? Sir, you understood? Clear? मेरा प्रॉपर्टी 1 करोड़ से 1.2 करोड़ हुआ था, 20 lakhs मेरा प्रॉफिट है, मैं 1 lakh ऑलरेडी पे किया था प्रीमियम, राइट? So 20 minus 1 is my 19 lakh profit. Okay, when I'm executing the contract. Everyone clear there? Okay. Yeah, keep talking, because we need to move. We have to cover a lot of topics. Now, with the 1 crore, the property value has come down to 95 lakhs. What is going to happen? As a buyer, I need not honor the contract. I will come out of the contract. What am I going to lose? I'm going to lose only the 1 lakh premium that I have paid. It's as simple as that. Similar, take the case of the seller, right? In the case of the seller, if the 1 crore has become 1.3 crore, right? Will he make profit on the 30 lakhs? He cannot make profit on the 30 lakhs because what is the committed price, agreed price? It is only 1 crore only, right? So even if there is 30 lakhs profit, his profit is limited only to the premium that he has received, which is 1 lakh. Okay, clear? It's very simple.
Yes, sir.
Okay.
Yes,
Now,
yes.
when that 1 crore has become 65 lakhs for you, what is going to happen? The buyer will walk out. Buyer will say, no, I don't want. Primarily, right? It has become 65 lakhs. So what is the loss that the seller is going to make? The seller is
34
going to make a
lakhs.
loss of 35 minus the premium that he has received, 34 lakhs. That means there is an unlimited loss that is potentially possible for the seller. Got it?
Yes.
Okay. Perfect.
Yes.
Okay. Good. Now let's move on.
Kiran, one more point here. Actually, options trade and delivery is two different concepts. Actually, whenever that is going to be to, it is a delivery point of contact only that the options questions is going to be asked. That is where exactly just we need to understand. That is where exactly the clear difference is going to be happen for the understanding the things.
Okay, sir, I'm completely talking from the exam perspective. You learn the concepts, you'll clear it. Don't worry about intraday delivery and all that stuff, right? I did not get what point concept you're trying to make.
No, the point is like this. Actually, the concepts, what are the options call long or sell or call or put all these things and all completely delivery point of view. Only the questions is going to be asked. It is not for the trading point of view. That is where exactly we need to understand. Then only that it is loss is unlimited or limited. That it will be going to be clearly going to into the mind of the our persons actually. That is where exactly.
Sir, that is what we have done. No, that is what we have done. No, what did we say? What did we say? As a buyer, I have agreed to purchase the property after 1 month. All these discussions are happening at 1 month time frame. No, what is that 1 month time frame? That 1 month time frame is an expiry of the contract for me.
Correct. That is what actually delivery point of view only that we need to see the questions. That is where exactly just I want to point. I want to make a
let's
point.
move on, sir. Let's move on. Okay. Now here, I wanted to, tell you this interesting thing, right? This is a very, very, four-way matrix, right? I want you to, just sink in for a moment. Okay. Now what happens is, there are two things, right? There is a call, there is a put. What is a call? If I anticipate my house will go from 1 crore to 1.2 crore, I will actually take a call option. Got it? What is a put? If I believe, put buyer, what I believe is, right, if I believe that my 1 crore, will become actually to 95 lakhs or 90 lakhs, I am actually put buyer. That means I am actually selling the house. Got it? Similarly, there is a call seller and there is a call, put buyer, just you need to reverse it. Okay. Can you actually sing this, for a moment? Might be we will go through one example if possible.
Simple. Buyer is a right and seller is a obligation. Very simple. That is the easy way to just remember actually.
Yeah. Okay. I think we will discuss this maybe tomorrow. Don't put too much of stuff. For now, I think you guys are very clear, right? Let me actually move to this part. Primarily, I'll switch gears. For a moment. So let me switch gears. I will actually talk about a couple of things here, right? Just give me a second. If I can actually do this. So primarily, I want us to understand, three concepts here, which are the most important concepts. There is something called as a spot price. There is something called as a strike price. And based on spot price and strike price, there is something of a very important concept called moneyness of an option. Okay. I thought I had opened my broker, but let me quickly open this. Sorry. Just bear with me for 1 second. Meanwhile, any questions on whatever we have discussed? See, the one thing for this exam, which you have to keep doing is, keep the things very simple, right? The moment you complicate, you complicate things.
Kiran, in the futures, you told that you can settle or square. What is the difference between settling or squaring?
Settlement means you need to honor that contract, You have to go to the gold shop guy and then you have to, pay the price and then you have to, you have to honor that contract, primarily that's what I mean. Okay. So I want us to understand two interesting concepts here, to start with, primarily. Now let's actually go back to, might be the Reliance example itself, right? The first ones. Now, Reliance we have seen, 3 days ago. What is the price of the Reliance here? What is the price of the Reliance?
1307.8.
1307 is the Reliance price here, right? Now, what I will do is I will actually add, two concepts here. Reliance 1300C. And then I will add Reliance 1340C. We will understand from our, the house example itself. Don't worry about this part. Okay. Primarily, what I have done here is, where is this come? Just come on the top. Let me. Sorry. Sorry. Yes, really sorry. We'll keep the features later. Okay. First, let me quickly go back to my, the house example for us a little bit, and then we will understand the spot and strike, and then we'll come here, right? Okay. What is my, two things here, right? In the first example, in the house example, what is the price that I have agreed to buy?
1 crore.
1 crore, right? Now, Now there are a couple of instances here, right? Now what is spot price? Spot price is, strike is the 1 crore price. Now everyone is clear there, right? What is spot price? Spot price is, for example, like the daily movements of the house price for. Got it? In our instance, when we talk about the stock, the daily movement of the stock price is the spot price for us. And I will talk about strike price. There are different type of strike prices that you can take. Okay. So let's quickly go through a couple of math here, and then we will see. For example, today spot price is equals to 98 lakhs, right? And the strike price is equals to 1 crore. Okay. Which is what, right? The price that I'm trying to buy. Okay. In this instance, will I make money or not? Will I make money or not? Quickly.
Buyer will not.
Buyer will not make money.
No.
Seller will make money.
Loss
From
of
the
1
buyer
lakh.
perspective, guys. Only from the
Loss of
buyer
1 lakh.
perspective.
Buyer will lose.
Okay, hold on. Everyone, hold on. Calm down. Okay, calm down. Okay, here, forget about all the instances. It might be I should have reframed the question here, right? My strike price is 1 crore. Okay, I, as a buyer, I am actually going to execute this. Okay. Forget about the option part. I want you to think from the common sense angle. Okay. If the spot price today is 98 lakhs and if I'm executing, okay, forget about the option, right? In the sense like, 1 crore pay, execute karna hai. But like, if I'm executing, the transaction today, will I be in profit or loss?
Profit, sir. 2 lakhs.
Profit of 2 lakhs.
2 lakh profit.
Profit of, very good. No. Why? Not loss, guys. No.
Sorry. Profit.
Today house price is 98 lakhs, sir. Okay. But what is the strike price? For me, the ability to sell it is at 1 crore. No. So if I'm selling it today, what is going to happen? I'm going to pocket 2 lakhs as my profit, right? Everyone clear on this? Everyone clear on this?
No, I'm not clear.
It is under buyer's perspective, it is loss.
No, I'm not.
Okay.
Want to consider
okay, guys, forget about all the options part here, right? Forget about all the options part. Let's come to the normal, the day-to-day stuff. Okay. You are trying to buy a home, guys, right? You are trying to buy a home. Okay. So what? Or forget about the home part here, right? Forget about the home part here. Okay. So say for example, on the Amazon, right? The action price is somewhere around 12,000 rupees, something. Some AC, whatever, some TV or whatever, right? Amazon pay discount chal raha hai, right? You are actually getting, that particular, commodity at 11,000 rupees today. Okay. If you buy that, are you going to make profit or not? Simple.
Profit.
Yes.
1,000.
Why? The actual cost is 12,000, but you are buying it 11,000, right? So once the discounts are over, the price will come back to 12,000 again, right? Clear. Now let's work on the opposite side. The actual price is 12,000, but you are paying 12,500 or 12,300. What will happen?
Loss of 300 or 500.
Loss of 300 or 500. Okay. Here, in this instance, I think you are all stuck on the house example there, right? Now let's come back to this house example. In the house example, what is the strike price? 1 crore is the price, right? But for example, right? Leave that for a second. I think I understood what you are trying to understand. What you are saying is, mere ko 1 crore rupee, like I have to execute it. Okay, that's not the case for now, right? For example, right? The execution changes here. Today the price 1 crore, but like today my price, the market price is 98 lakhs. Okay, if I execute this, will I make money or not?
Yes, make money 2 lakhs.
We will make a money of 2 lakhs, right? Clear?
How you can make money of 2 lakhs, sir? The price is 1 crore.
I just like to add that suppose you have a, like a nala or something in front of your house. That is why you are not getting the premium of 1 lakh, and that is why you have to do a distress sale of 98 lakhs. That is why later, when that gets repaired, you can sell that for 1 crore. Just to relate it with the house example.
No. The spot price is 98 lakhs, but we are paying 1 crore only, no?
No.
No, sir.
Okay.
For example,
Okay, let's go
in a
back. Right,
930,
go ahead.
But I have a separate question. There is no premium will not be required in this case, no?
Here there is no point of
forward contract
contract at all. So here,
Okay.
simply we are talking about price.
Guys, cut. Okay. Forget about like what the previous thing of 1 crore etc. and all, right? So let's consider this, right? See, there is a house which is valued at 1 crore. Okay, imagine this. Let's completely switch the gates here, right? There is a house which is actually valued at 1 crore. Okay, but for example, like now I am actually seller today. It's a hypothetical example, right? I am a seller. Now I'm actually selling the house, today it might be at 95 lakhs. Now you as a buyer has come into the market here, right? So actual value of the house is what? 1 crore, but like you are buying at 95 lakhs. Will you make profit or not?
Profit of 5 lakhs.
Yes. In that case, we'll make profit.
No.
Correct.
Kiran, say unless buyer again sell that house to some buyer.
Okay, I
make profit, right?
I think people you are okay. So let's go back here, to start with, right? Might be I will show you the Reliance part here. Okay. So what is happening here is, so for example, the Reliance, this is actually called the spot price of Reliance. What is the spot price of Reliance? 1307, right? Agree?
current market price.
Current market price is 1307, right? My whatever mentioned.
Current market price will be.
Guys, hold on. Let me complete once, please. Okay. So 1307 is my spot price here. I have added two things there. One is 1300 and another one is 1340. Okay. Those are actually called strike prices. Okay. Those are actually called strike prices. Now tell me, right? 1300 minus 1307 or 1340. 1307 minus 1340. Where will I actually make money here?
1340, sir.
People are getting
1300 also 1340.
No, sir. Only when it is lesser, we will make money. So wherever we'll get lesser than the spot price, we'll get the money. Profit.
More than the
I think we need to. No, I think we need to. I think I need to come up with a good example. I think you guys are getting confused. Okay, so for example, let's look into this again here, right? आज का प्राइस 1307 है. Got it? मेरे पास I have 1300. Okay, I have 1300. Okay, if I sell today, will I make money or not? Let's understand from that perspective. Let's completely get into the plain English part. The price today is 1307. Okay, but I have it at 1300. Okay, so for example, forget about Reliance. There is a commodity here. Okay, if I sell that in the market today, will I make money or not? Yes.
Loss.
What is
Simple
money.
thing, sir. We will make money,
What is the price you bought it?
Sorry?
What is the price you bought it, sir?
Guys, hold on, guys, you're complicating it. Okay, I'm talking in plain English. Just listen to me very carefully. Okay, my commodity, what I have bought it is at 1300 today. The price is at 1307. Okay, if I'm selling it today, will I make money or not? Yes.
Yes,
right?
sir. Yes, sir.
Yes.
Okay.
Yes.
Today the price is 1307. Okay. But the price of the commodity that I have purchased is at 1340. Okay. If I sell today, will I make profit or loss?
Loss.
Simple. Okay.
Profit.
Just all guys, please let me complete. Please only understand until there. Okay, to start with. Okay. There is 1300, there is 1307, and there is 1340. Okay. I have purchased the commodity at 1300. I have purchased the commodity at 1340. But the actual price of the commodity that is going on today is 1307. Think of proper market. Today, the commodity that I have purchased at 1300, if I sell it in the market, I will actually make money. Because why? 1307 is greater than 1300, right? But the commodity that I have purchased is at 1340. I will be making loss, if I sell it today, because why? My price of that instrument or the commodity is 1307. I will actually make a loss of what? Close to what? 33 rupees. Everyone clear on this particular concept, at least for now?
Yes.
I know there is a lot of confusion here, right? Now translating that into the option jargon, what we are going to say here is, the 1307, whatever it is there, is actually my spot price of the market. What is my spot price? Forget about all our house examples and all that. For now, just come to the real option one. My 1307 is my spot price. Got it? What is my spot price? That means the spot price keeps changing every 5 minutes, 1 minute, or whatever stuff. It is very fluid. Okay.
That is trading price.
Guys, hold on, please. Let me complete. Okay. So when I have taken a strike price of 1300, okay, the strike price 1300 is my strike price. Okay. So if I'm executing my strike today, right, if I'm actually selling, this today, 1300, but the spot is, 1307, will I make money? My strike price is less than my spot price. Will I make money?
Yes, sir.
Clear? Okay. Now let's come to 1340. 1340 is my strike price
So
here.
can you
Sir, one second,
explain
let me
strike
complete.
price?
Let me complete. We'll repeat. Sorry, please. Sir, 1 second. Okay. Now, my spot price here is 1307. My strike price here is, 1340 here, right? Now, if I execute this, will I make money or will I make loss?
The spot is
Loss.
Loss.
40, we make my loss.
Got it? Okay. Now, let me open the floor to questions. For understand this one, right? 1300 high, 1307 high, 1300 high, 1340 high. Okay. This is my spot price. This is one strike price. This is another strike price. Okay. So now let's debate. Let's actually ask questions, and then I will build the moneyness on top of this. Okay. Okay. Questions.
Yeah, what I understand is Reliance 1300 call is I agree to buy at 1300, right?
You agree to buy
At 1300.
Kiran, one
1300,
point with that
right.
we are missing. See, strike price
Call-
is going to be
call
changing. The
is
premium is
1300.
also going to be changing. That
Sir,
is
one
very
at a time,
exactly
one
the
at a
difference.
time. Sir, one at a time, please. One at a time. Sir, Arun sir, hold on. Vijay sir is asking a question. Vijay sir, go ahead.
Yeah. See, what my question is, the spot price is 1307.80, but I am saying that I'll buy at 1300. This is the call means buy, right? So I'm agreeing to buy at 1300.
Correct.
This is what it means, correct? So suppose if the price is 1307, how will I make profit here? I don't understand, sir. Because I am agreeing to buy at 1300. So only if that price comes to 1300, then only I'll buy, right?
No. That is where the moneyness of the option comes into picture. That is our next concept. For now, don't worry about the premium, etc. and all that stuff, right? For now, just understand 1307, 1300, and 1340. For now, forget about the premium that you are buying, etc. and all, right? You're only focusing on the price point. Okay, you're only
Correct.
focusing on
Okay.
the price point. Okay.
Okay.
1307, you're buying. You have a 1300. You have a 1340, right? Here you will make money, here you will, lose money. Only first, let's focus only on this part. That is why I said like options are little tricky, but like we'll pay that.
Yeah.
Don't go to premium. You understood me, right? Okay, now
Can I add
Arun sir,
one
go
point?
ahead. Yeah.
Yeah, spot price is going to be the underlying asset, and that options trade is going to be the options contract basis. Okay, so we need to concentrate on the contract is the expiry and duration period, so that premiums and strike price are the key points on that part, as well as when we are going to be the spot price is going to be the delivery and underlying asset prices only. So these are all, we should not be confused. We have to go for only options with the strike price and the premiums and the moneyness. That will be going to be the clear the concept actually.
Difficult to understand.
Okay, don't worry.
Things more quickly.
So it's not
Yes,
difficult, guys. See, okay, let's work on this, right?
Simple thing, as you said, sir. I have 1,300 rupees and I am going to buy Reliance at 1,307. How will I buy when I have only 1,300 rupees, right?
You are buying contracts, boss. Here you are not buying the original delivery. So you are buying the contracts. So contracts are different from the underlying asset when the delivery is going to be happen actually. That is the difference here.
Paying the premium and taking it.
I am not able to understand actually.
Okay, we will repeat this with an example. Marty will come with an example. Okay, so I think there is so many things that got confused here. First of all, okay, so first of all, I'm trying to keep it simple and we are bringing in options. We are doing so much of jugaad. I wanted you guys to focus only on 1307, 1300, and 1340. 1300 and 1340 are options. There is premium, there is delivery, everything is there. Okay. But I wanted to just focus, first understand this concept of 1307, 1300, and 1340. First of all, until then, everyone is clear where you will actually make money. Okay. Don't get into option set. Don't get into premium set. Okay. We will cover that, how it happens, etc. and all that. In a typical market, for example, like forget about all that stuff. In plain English, 1300, the present price is 1307. I have something at 1300. If I'm going to execute that, am I going to make money? I'm going to make 7 rupees money, right? The price is 1307. The whatever I have, whatever I have bought it is a 1340. If I'm executing it, will I make money? I won't make money. I will actually lose 33 rupees. Agree? Until then, clear. Don't mix match. Don't do masala and all that. I know this is little complicated. That's why we are going one step by step by step. Until here, everyone clear, guys. Don't get into the option set. Okay. Now, I will introduce options. Don't worry about that. The reason why I'm only talking about spot price and strike price at this point of time. Okay. I'm not even talking about options. Okay. I was talking about this is my spot price, this is my strike price, this is my strike price. Okay. Until then, only clear, right? Now, what actually happens is, for example, there are two options that are available. There is this concept called moneyness of an option, which is a very interesting concept, which is where like a lot of questions come in this exam, because that is where like we are trying to spend time here, right? What is a moneyness of an option? Okay, moneyness of an option is whatever is the strike that I have, right? If I execute this strike today, will I actually make money or not? Is what is called moneyness of an option. Okay, I'm repeating that again. I have, a commodity or some instrument with a certain price band. If I execute that, commodity, if I sell that, as of today, will I make money or not is actually called moneyness of an option. Okay, guys. Spot price, strike price, strike price. Okay. Now let's actually come to the moneyness of an option. In the case of 1307, so 1300 and this is 1307, will I make money here in this moneyness of an option?
Yes.
Plain. Keep it only plain simple for now. Don't complicate it. 1300 because why? I'm actually selling at a higher price than the purchase that the price that I have bought. Okay, I will make money here. In the case of the strike price of 1340, whereas my spot price here is 1307, will I make money here?
No.
No. So as simple as that, right? Until here, everyone clear. We'll take one step at a time. Okay. Until here, everyone clear. Okay.
Yes.
Cool. Everyone clear? Any questions? Okay.
Yes.
Okay. Now don't get into the option set, right? Options, premium, beta, gammas, and all. We will cover it. Okay. Here the concept what they will test is, what is my spot price, what is my strike price. Let me actually show you. No, this is exactly what happens. Okay. Now there is another important point here, right? 1300, 1307, and 1340. For example, if I have a commodity exactly at 1307, okay, will I make money or not if I sell it today?
No money.
No.
Zero. Right?
Zero.
Obviously, right? Because my whatever I have bought, I am selling it. I'm not making neither a profit, nor a loss here. Okay, clear, right? Now, when 1307 equals to 1307, that means when my spot price is equal to my strike price, it is actually called, in the moneyness concept, the concept is called at the money. Clear? The concept is called at the money. Okay. When my strike price is actually less than, what is my strike price? This is my strike price, 1300. My strike price is less than my spot price, which is 1307. This is actually called in the money. Got it, guys? Only listen to me what I'm saying. Don't think too much. When my strike price is greater than my spot price. What is my spot price? 1307. And what is my strike price? My strike price is 1340. In this case, I'm going to lose the money, which is actually called out of the money. Got it? At the money, in the money, out of the money. This is out, this is in, this is out. Clear? This concept actually is called moneyness of an option. First of all, from plain English terms and simple logic, you are able to understand this. Everyone clear on this? Because this is a very, very, very important concept for this exam. Everyone clear on these numbers? Forget about our house thing and all that stuff. We will translate all that into how this whole thing gets structured. But for now, you are able to understand spot strike, at the money, in the money, out of the money. Everyone clear on this? Any questions?
Yes, clear.
Yes, sir.
Sir, Joshi sir, I think you got super confused before. Are you there?
Just repeat once again, Kiran.
Yeah. This is, this is understood. But
sir, don't worry. We will convert that.
Yeah.
We will convert that. Just understand. Let's
Okay.
take one step at a time. Okay, sir. I'm repeating this for everyone. Again, look into this. Right? Reliance, for me, I'm taking, forget about that part here, right? What is the Reliance price here? Reliance price as of today, or forget about Reliance price right here, right? Choose whatever commodity, might be कुछ भी समझ लो यार. My commodity price today, my commodity price varies, right? 1307 is my one commodity price. I have purchased a similar commodity at 1300 rupees. Now I wanted to sell this today. If I sell this today, will I make money or not? I will make money. Because why? I purchased at 1300. The today's price is 1307. My profit is 1307 minus 1300, 7 rupees. Whereas today's price is 1307. I have purchased this commodity at 1340. Right? Now today I wanted to execute this. Right? Today I wanted to execute this 1340. Will I make profit or loss? I will make loss. Because 40 minus 7 is 33 here. Okay. In the option concept, what happens is there is a concept called moneyness of an option. This is spot, this is strike, this is strike. If I execute the strike today, okay, only focus on this part. If I execute this strike today, will I make money or not is actually called moneyness of an option. Okay. In the particular, in the first example, if I'm executing selling at 1300, I'm actually making money. Okay, that is actually called in the money. At 1307, I bought a commodity. I sold it at 1307. 1307 minus 1307 is 0. I am not making anything. This is actually called at the money. Okay. 1340 is my strike that I am executing, but the price is only 1307. I am actually making loss. This is actually called out of the money. At the money, in the money, out of the money. To your left is your in the money. To your right is out of the money. Clear, everyone?
Yes.
Yeah, clear.
Yes, yes, yes,
Okay.
clear.
Okay.
Kiran, anything specific left after this moment? I mean, after this time?
Sorry?
Anything left after this point? I mean, how long the class is going to go after this?
I will take another 5 minutes and wrap up. Okay.
Okay. Thank you.
Because I just wanted to show you quickly this part. Okay, so this is the product that we have built anyways. So here what we generally do is, you see here, this is the NIFTY. Whatever is the strike price at that point of time here. I want you to sort of understand. 24,200 is the ATM here, right? What did we say? This 24,200 is the ATM. Okay, at the money here, right? Now look into that and then tell me which strike price you have to execute for you to make money. Now on the top there is 24,250 to 300, 350. Niche pe 150, 100, 050 high. Okay. What is the lower one called? What is the lower one called?
In the money.
In the money. Very good. Lovely, right? Now, if I execute the strikes of in the money, will I make money today or not?
Yes, make money, sir.
Very good, right?
Yes.
What is the other side?
Out of the money.
Out of the money.
Out of money.
Out of the money, right? If I execute those strikes today, will I make money or not?
No.
Absolutely.
No, out of.
Right. Okay. Until then, clear here, right? Okay. Just remember this, and we will revise this concept again, might be tomorrow or on a Monday in detail. I want to quickly show you this part here, right? With the PPT part. Yeah. Okay. What are we saying here? What are we saying here? In the money, if I'm exercising, it will give me a positive payoff. Okay. It will give me a positive payoff. At the money, if I'm exercising, is not going to give me anything. It will give me a zero payoff. Out of the money, when I'm executing any strike, it will actually give me a negative payoff. Okay. In that case, you see here, at the money, what is happening? Spot equal to strike. This is my spot. My strike is also same. Same is for the put as well. In the case of in the money, what is happening here? This is my spot. This is my strike. What did we do here? Yeah, sorry. This is my spot and this is my strike. Okay, my spot is greater than my strike. Agree, right? Don't get confused, because I think I'm telling you this because this is little these are the questions that come through. Okay, this is my spot price. Going back to the Reliance 1307 is my spot price. Okay, what is my strike price? My strike price is 13,000. Okay, is my spot price greater than my strike price?
Yes.
Yeah, that is what happens here. Okay, in the case of out of the money, what is going to happen? My spot price is less than my strike price. Ante kadandi. Sorry, we got into Telugu. So 1307 is less than 1340, right? Everyone clear on this?
Yes.
Okay, what I want you to do is, just after the class, just put it on the paper, right? This is my spot. Spot is the current price. Strike is the price that I'm executing. Strike is the price that I'm executing. Okay. When my, the strike price is less than my spot price, this is out of the money. Okay. When my spot price, is, when when my strike price
Strike
is
price
less than,
less
sorry,
than
my
spot.
bad, yeah. Strike price, sorry, my bad. When my strike price is less than my spot price, that is in the money, I'm going to make the money. Okay. When my strike price is greater than my spot price, that is out of the money, I'm actually going to lose the money. Clear everyone on this? Everyone clear?
Yes, sir.
Yes, yes.
Perfect. Okay. We can wrap the session today. I know it felt little heated, but this is a very, very important concept because on the moneyness of an option, you will get at least 4 to 5 questions. Okay. And there will be some numericals as well. Okay. Forgot about the housing part that we discussed, but for now, I think you understood the strike and the spot here, right? Everyone, any questions on this? We'll take a quick pause. 2 minutes, any questions, and we can wrap up the session. Any questions now?
No, whatever you explained is okay.
Sorry.
Okay. Go ahead, sir.
Just show me that slide, sir, which we were discussing lastly.
Okay.
In that slide, what we were able to understand is, so you were mentioning about the analogy strike less than spot is equal to in the money and the otherwise, right? So that are here I am able to see that there is something called call or put, and here it is all in the opposite. So how do we relate it, sir?
Sir, don't worry about the put. Put we will introduce it tomorrow.
Now whatever we have discussed, is relevant to only call option.
Only call.
Yes. Trying to mention.
Only call. Okay.
Okay.
Because
so in that we have just replaced the place. Instead of spot greater than strike, you are mentioning it as strike less than spot.
Yes, obviously.
Reverse करते.
Reverse कर लीजिए. That's it.
No, so
I will change this.
okay.
Might be I will
but
change
how do
this.
we actually want to take as per this thing? So as per the slide or as what you have told?
Sir, spot. This spot is greater than strike or strike is less than spot. It's one and same one, no? From the math perspective.
Okay.
See, this is the spot, sir. Sir, one second. This is the spot, sir. This is the strike, sir. What did I say? Spot is greater than strike is what I told. Okay. Reverse kar lijiye. What is this? Strike is greater than the spot. What did I do actually? I actually did spot greater than strike. Might be I went on to the left hand side. You actually come from the right hand side. You do that strike is less than the spot. It's as simple as it. The reason is the exam actually questions this sort of a little tricky things. That is when we lose marks. The concepts are not tricky at all, right? It is just that the positioning and all. What you remember is spot or is always the current price for me. Strike is the price where I'm executing. That's it. Okay, clear, sir?
Okay.
So can I say that strike price means selling price?
Correct. Very good, sir. That's it.
Yeah, correct. Yeah, thank you.
Any other questions, sir? Guys, questions? How many women are there? I don't know. No women ask any questions. Are there any ma'ams here? Come on, we need more women also to pass the SIF exam. Okay.
Sir, just one question. Will we be practicing questions?
Nice. Now, yeah, you should give a party yourself today. Yeah, you made our evening. Go ahead, Bob.
Will we be practicing questions on these concepts?
Yes. Don't worry. There are, I think, close to 1,500 questions. I'll actually practice all the questions with you. Okay. Just stay with me, right? Practice that. We will do that any number of hours. I'm ready to sit with you. Okay. You practice those, and next day you book the exam and you will pass. Okay. We will practice all the questions related to this. The point is, but also there are a lot of questions on the concepts as well. That's why I wanted to understand the concept. You're clear on the concept, ma'am, today?
Yes, concept is clear, but I think with the questions only we'll be able to know, are we able to crack it or not?
You will be able to, first of all, concept samajh lijiye, right? In the concept itself will have a lot of questions. Numericals are, will be very easy. Don't worry. Numericals is just like, spot strike, you just need to do plus or minus. Their numericals are very, very easy.
Okay.
We'll practice those. The answer is yes. Okay. Any other questions, guys? Okay. What should we do tomorrow? Should we catch up at 4 o'clock in the evening?
Yes, sir.